Buy these undervalued gems before they come to the limelight. These are the stocks to make you a millionaire and are worth holding until 2030. Leonardo DRS. An emerging defense company has a strong order backlog of $4.4 billion. Aker BP ASA. It has high-quality oil and gas assets with 2P reserves of 1.86 billion barrels of oil equivalent. Polestar Automotive. Deliveries growth is likely to accelerate in 2024 coupled with margin improvement on cost-cutting. Let's dive in. Here are the 3 under-the-radar stocks that could make you a millionaire. Welcome to Timely Investment Research. Investors who have spent a long time with the markets will understand that it's difficult to spot multi-bagger stocks. Often, the stock in the limelight fails to deliver. And yet, an under-the-radar stock delivers 10x or 20x returns. For stocks to make you a millionaire, investors need to be prepared to put in the work of scanning through an ocean of listed entities. These types of stocks generally trade at a valuation gap. In other words, the larger markets are still unaware of the stock potential. On the other hand, stocks in the limelight generally trade at a fair market value or are overvalued. The current market condition remains challenging with headwinds of geopolitical tension, inflation, and growth deceleration. However, it's the best time to gradually accumulate stocks to make you a millionaire. Once sentiments reverse, undervalued stocks will surge higher and create value, delivering multi-bagger returns. Number 1. Leonardo DRS. Leonardo DRS is not the name you would hear when talking about defense stocks. The emerging player has quietly moved higher by 84% in the last 12 months. Leonardo DRS stock remains attractively valued, and considering the industry tailwinds, I am bullish on the stock delivering multi-bagger returns. As an overview, Leonardo DRS is a provider of defense electronic products and military support services. The key focus areas include advanced sensing, network computing, and force protection. The company was formed after the merger of Rada Electronic and Leonardo DRS. Being a leading defense technology player, it's likely that Leonardo DRS's order backlog will continue to trend higher. For second quarter 2023, Leonardo reported revenue of $628 million. Further, with an order backlog of $4.4 billion, clear cash flow is visible. Additionally, the company has a strong balance sheet. It's positioning itself for organic as well as acquisition-driven growth. Number 2. Aker BP ASA. Aker BP ASA stock has remained sideways in the last 1 year. This seems like a good opportunity to accumulate the 9.58% dividend yield stock that trades at a valuation gap. Aker BP is among the best emerging names in the oil and gas space. By 2030, the stock is poised to deliver multi-bagger returns that's backed by high-quality oil assets in the Norwegian continental shelf. To put things into perspective, Aker BP has 1.86 billion barrels of oil equivalent as 2P reserves. Further, 2C contingent resources currently stand at 774 million barrels of oil equivalent. With a strong reserve base, Aker BP is positioned to deliver sustained cash flows through 2030 and beyond. Importantly, the company's assets have a low break-even. Even with correction in oil price, Aker reported operating cash flow of $2.9 billion in second quarter 2023. Therefore, if oil trades at $100 per barrel, Aker can potentially deliver $15 to $20 billion in annual operating cash flows. It's not surprising that the company has an investment-grade balance sheet with high financial flexibility. Number 3. Polestar Automotive. Polestar Automotive is among the lesser-known EV stocks that's been ignored by the market after a dismal stock performance. However, Polestar holds promise. In fact, the worst may be over in terms of stock downside. Further, business developments are likely to be positive in 2024 and beyond. First, the company has strengthened its liquidity position with a cash buffer of $1 billion as of second quarter 2023. Further, Polestar reported robust delivery growth of 50% on a year-on-year basis for third quarter 2023. Deliveries growth will likely remain strong in 2024, backed by the launch of Polestar 5. The company is targeting the launch of Polestar 6 in 2026. Therefore, the attractive lineup makes inroads for Polestar for new markets, delivering growth that will accelerate. Also, Polestar has initiated cost-cutting measures in 2023. Reduction in cost coupled with operating leverage will translate into better earnings before interest, taxes, depreciation, and amortization margin in 2024. This is a key trigger for Polestar Automotive stock upside. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.